Becoming a successful investor can be daunting, especially when the unpredictability of the market comes into play. That's why Ray Dalio, a seasoned global macro investor with over 50 years of experience, conducted extensive research into the past 500 years of economic history. In this enlightening video, you'll gain insights into how historical events shape today's market and economy, enabling you to comprehend better and forecast future challenges. We often find ourselves taken aback by unprecedented events that we have never encountered before. This realization compelled Dalio, the co-chairman and co-chief investment officer of Bridgewater Associates, to delve deep into the annals of history spanning 5 centuries. In his research, he unearthed recurring patterns driven by economic turmoil, social transformations, and global conflicts, decade after decade. This comprehensive study was crucial in unraveling the mysteries of the events around us and comprehending their impact. During an interview on the Meet the Leader podcast at the 2022 World Economic Forum annual meeting in Davos, Ray Dalio emphasized the importance of understanding the past to effectively navigate the challenges of the present and anticipate future issues. Throughout his research, he discovered that many surprising occurrences had occurred repeatedly throughout history. 3 key factors have emerged as critical areas of concern. First, the monetization of debt, which is currently underway, profoundly impacts various aspects, including inflation. Second, the profound wealth and value disparities have led to internal conflicts between leftist populism and rightist populism. The implications of this internal struggle are significant. Third, we are witnessing a struggle between multiple forces, exemplified by the tensions between Russia, Ukraine, and NATO. Additionally, the rise of China as a major power and the relative decline of the United States has introduced a new dynamic. Consequently, various types of conflicts arise, particularly in the absence of a global court or justice system, leading to the imposition of sanctions and intensifying great power competition. Leaders and decision-makers must grasp these historical patterns and dynamics to effectively address the challenges of our time and foster a more stable and prosperous future. The United States is actively imposing sanctions, which has significant implications for the dollar. It is worth noting that some countries are now seeking alternatives to the dollar system. We can draw parallels to a historical event in Japan when the United States froze Japanese financial assets and imposed economic sanctions, leading to restrictions on oil imports. Consider a hypothetical scenario where China, which accounts for 22% of imported manufactured goods in the U.S., faced sanctions. In this case, let's imagine that China's trade with the U.S. stopped. The impact would be far-reaching, resulting in both inflation and shortages. Such a situation would be highly detrimental. Additionally, it might prompt policymakers to contemplate tighter regulations, such as implementing capital controls. Although this outcome is not implausible, we can draw parallels to past phenomena during World War II, where economic conditions fueled internal divisions and conflicts between left-wing and right-wing populism, ultimately leading to the downfall of democracies in Japan, Germany, Italy, and Spain. The implications of sanctions and their potential consequences serve as a reminder of historical events and the fragility of economic climates. They highlight the need for careful consideration and prudent decision-making to maintain stability and avoid detrimental outcomes. We are witnessing a shift towards a climate where ideological and political resources are more prominently allocated. This transition brings various challenges, including trading limitations and restrictions on currency exchange. These constraints significantly negatively impact economic efficiency and contribute to rising inflation. We must delve into historical patterns to comprehend how these components interplay and function together. By understanding these patterns, we gain insights into the functioning of this intricate system. In the vast expanse of 500 years of history, one particular aspect caught Ray's attention. History has a way of repeating itself, consistently revealing the emergence of a new world order. This shift often accompanies a conflict between opposing parties, establishing a new domestic and global order. Once one side triumphs and gains power, it realizes the equalizing effect of war and takes steps to eliminate debts. This paves the way for a period of peace characterized by wealth and internal stability. However, as the cycle progresses, a new challenge often arises in the form of a rising great power, such as China, which challenges the existing world order. Alliances with other nations like Russia come into play, further shaping the global dynamics. This cyclical pattern is marked by rising living standards and wealth periods, during which no one wants to conflict with the dominant power or return to past confrontations. This was evident during the Industrial Revolution and the post-World War II era. By recognizing the historical repetitions, we gain valuable insights into the ebb and flow of the world's socio-political and economic landscape. It allows us to navigate the complexities of the present and potentially anticipate future shifts in the global order. The pursuit of improving living conditions often leads to unintended consequences, such as widening wealth inequalities and increasing debt burdens. As economic disparities grow, opportunities become skewed toward those with more financial resources, enhancing their power and providing advantages for their offspring. Consequently, three common outcomes frequently arise from this scenario. Firstly, excessive debt accumulates, resulting in financial losses for individuals and institutions. This predicament highlights the possibility of accumulating debt even when insufficient income supports it. Resolving this debt dilemma presents a challenging decision: printing more money to repay debts or resorting to physical currency. However, the consequence of increasing the money supply is devaluing the currency. Throughout history, the choice between depression and inflation has often leaned towards printing more money, similar to the events of 2020 and the circumstances witnessed during the 1930s. In the 1930s, this approach was associated with both left-wing and right-wing populism, known as communism and fascism, respectively. Regardless of the specific ideology, populism emerged as a driving force, leading to incompatible and confrontational situations. The clash between populism and the resulting confrontations ultimately transformed four democracies, Germany, Italy, Spain, and Japan, into more authoritarian forms of governance during the 1930s. It is worth noting that the strengths and disparities between nations vary. At the inception of a new world order, the dominant power, such as the United States in the past, possessed a significant share of the world's currency and controlled a substantial portion of the global economy. Back then, money was tied to gold. However, challenges emerge over time as competition increases and gaps narrow. As discussed by Ray, these challenges involve the impact of war and government inefficiencies, which can lead to significant changes in daily life. The upcoming years hold the potential for profound shifts in our lives as we witness the evolution of these economic and political dynamics. The outcomes of these changes remain uncertain, but they will undoubtedly shape our future. The present circumstances are relevant as they guide understanding the past and ongoing events. A pivotal historical moment was in 1971, which marked the beginning of an inflationary period in the 1970s. Based on current indicators, it is highly likely that we will witness higher levels of inflation and increased inefficiencies in the years ahead. One notable manifestation of these challenges could be observed in supply chain disruptions, which may persist for an extended period. Furthermore, it is important to consider the potential impact of capital restrictions. These restrictions could limit money transfers beyond national borders, whether within the United States or any other country. In the past, we lived in a society where capital, products, and services could freely move, creating a flat world setting that facilitated the flow of resources and equal opportunities. However, in a world without such liberties, the distribution of resources becomes contingent upon the flow of money, potentially leading to unequal access and opportunities. Considering the effectiveness of punishment or deterrent measures, It is important to analyze their efficacy in various contexts. Further exploration and analysis are required to gain deeper insights into the outcomes and impacts of such measures. By staying informed and attuned to the evolving circumstances, we can better navigate the challenges and uncertainties that lie ahead. Over the next few months, we will observe three significant developments shaping the global landscape. Firstly, we will witness the impact of sanctions, which currently serve as a distinct strength for the United States, since it is no longer the dominant military power it once was. These sanctions will aim to hinder or prevent Russia from achieving victory. It will be interesting to see how other nations respond and adjust their actions in light of those measures. Secondly, we will observe how nations align themselves in this changing landscape. Typically, alliances and coalitions are formed based on shared interests and goals. We can already see these dynamics taking shape, and it won't be long before we witness the level of pressure exerted by the United States to sway other nations to choose a side. The conversations around choosing sides are becoming more prominent, and nations must make decisions in one way or another. Therefore, we will closely monitor how these teams are formed and who joins them in the next 6 months or sooner. To navigate this dynamic and uncertain world successfully, investors like you and me can take specific actions that align with historical patterns. One such action is to mix uncorrelated assets in our investment portfolios. We can reduce risk by diversifying across investments that are not strongly connected. Ray Dalio strongly emphasizes the importance of diversity and advises diversification across 15 or more uncorrelated investments. This approach helps lower the risk-to-return ratio and is a key principle in successfully traversing this new dynamic world. It's important to highlight that diversification is a timeless principle that holds value regardless of the prevailing circumstances. It is akin to a casino making its money. Assets are not interconnected, do not move in synchrony, whether positively or negatively. Understanding and implementing effective diversification strategies are paramount in managing risk and maximizing returns in an investment endeavor. In terms of a diversification, it's worth noting that there is a limited correlation between gold and the S&P 500. Therefore, a decline in the S&P 500 does not always directly impact gold spot prices. Bridgewater's portfolios encompass various assets, industries, and currencies. Additionally, Ray Dalio has acknowledged using cryptocurrency as a diversification tool. Another important strategy is to sell fully priced equities for a profit. Dalio does not solely rely on a buy and hold approach for stocks. Instead, he advocates selling overpriced stocks at a profit and reinvesting those proceeds. This rotation of the portfolio allows for investments in undervalued stocks that have the potential to outperform their industry or the overall economy. I want to share the top stocks Ray Dalio recommends holding on to. These include Cisco Corporation, Starbucks Corporation, the Coca-Cola Company, HCA Healthcare stock, iShares Core, S&P 500 ETF, Procter & Gamble Company, iShares Core MSCI Emerging Markets ETF, Johnson & Johnson, PepsiCo Incorporated, Vanguard FTSE Emerging Markets ETF, and Walmart Incorporated. It's important to emphasize that being a long-term investor has its merits. Both successful investors, Charlie Munger and Ray Dalio, have adopted a long-term investment approach. Investing for the long term tends to have less volatility than short-term investments. The longer you remain invested, the greater your chances of weathering market downturns successfully. By holding on to these recommended stocks, you may position yourself for potential long-term gains and possibly find yourself mentioned in the Forbes list of the richest people on Earth. Ray Dalio's track record and success as the co-CIO of the world's largest hedge fund speaks volumes about his expertise in the stock market and the economy. Alright, as we get close to wrapping up here, let's take a moment to like this video and subscribe to our channel. By doing so, you'll be supporting our channel and ensuring we can continue to produce educational and captivating content like this. Alright, let's get back to it. According to Ray Dalio, becoming a wiser and more capable investor involves two key factors: maintaining a well-diversified portfolio and being aware of your guiding beliefs. These principles, which Dalio refers to as a recipe for decision-making, can assist you in navigating challenging economic situations and achieving your financial and personal objectives. Dalio emphasizes that none of these concepts are entirely new, as the economy experiences cycles similar to other aspects of life. By recognizing and understanding these economic cycles, we can better prepare ourselves to cope with them, much like a doctor who gains perspective from repeatedly observing the same phenomena. It's important to note that these principles are theoretical and applicable to our current situation. In one of Ray Dalio's tweets, he stated that everyone possesses assets and liabilities. Understanding our weaknesses and effectively compensating for them is crucial for success. Individuals who lack this capacity often encounter difficulties. Therefore, it's essential to identify your weaknesses, such as your tendency to procrastinate, to enhance self-awareness and overcome any limitations hindering your progress as a successful investor. So, recession can be a game changer for your finance and can help you gain financial stability even when others are busy complaining. We've seen how to make this happen from Ray Dalio, so now you don't have an excuse. If you are looking for an extra guide, just check our previous videos as well. I'll be right there in the comments section also waiting to take your questions if you have any. I also have something cooking up for you that I'll be sharing in the next video, so ensure you hit that like button and get that notification bell so you don't miss out on any of the action. Until then, we'll see you in the next investor video.